If you're a business owner, you already know some of the problems with traditional financing. Banks can freeze your line of credit, SBA loans take forever, and when the economy tightens, access to capital gets harder right when you need it the most. So the question becomes, where do we store capital so we still have control when opportunities or problems show up? In this episode, we're going to break down how successful entrepreneurs use whole life insurance to create liquidity for their businesses. We'll talk about payroll during downturns, hiring, equipment, real estate, and even marketing. We're also going to show you the other side, when this strategy makes zero sense, how policies get designed poorly, and the red flags every business owner needs to understand before putting a dollar into this. So Dom, let's dive in. Our producer Joel has been super kind and really proactive and has put together all the things, all the questions that we'll want to talk about as it relates to setting the stage, as it relates to how we use life insurance. We're going to also talk about the things that you need to know, and it's going to even questions about like comparing SBA to HELOCs to high yield savings accounts. So Dom, this episode is going to be a ton of questions. Just know that these questions were put together by our producer, but it wasn't just coming off of his mind. He actually researched what the most common questions are as it relates to whole life insurance and business. And so whether you're an advisor, financial professional, whether you're interested in yourself, like these are the top questions that people are asking. So Dom, before we jump into the first question, what is like your overall thesis as it relates to business using whole life insurance? I'll do mine as well before we jump in, because I think it's important before just diving into question number one to like kind of take a step back and think how you're thinking about whole life insurance when it comes to running a business.
I'm just laughing out loud as you start talking about this, because I was just thinking, I'm like, Joel's probably just tired of us just blabbering about random stuff and ad-libbing stuff. So he's like, you know what, you guys are doing a good job. I need you guys to follow the script, answer some questions, and stop saying that you're the #1 growing podcast in the entire space.
I'm sad, man. We're no longer the fastest growing podcast on YouTube. So that's a very sad moment, and not because we got beat, because the producer Joel took that out of the script. He's like, Caleb, you got to stay on script here, which we've already failed at. So we've already failed, and we haven't even gotten started.
We got to have a little bit of fun. All right. So to answer your question, Caleb, I think that the ideation around how one should use whole life in operating a business should really be used as a capital reservation pool. I think for some businesses, for instance, right, one of the first questions says, what type of business / industries would benefit the most from this strategy? And I think that somebody like a real estate investor or just a real estate professional, it's just a natural way that you could use it as a ongoing reoccurrence, because you deploy, you then sell, you get the funds back, you put it back, and then you rinse and repeat. And I think that that's a natural reoccurrence, because they happen in segments, right? You're not going to do it like in a like every day or quick turnaround. You're going to do it like 6 months, 3 months, year at a time. So the transactions make way more sense. But from most business owners, you're really doing a lot of transactions, right? From expenses to going on trips and traveling and taxes and all the things that people do. And now I'm just thinking about that. Real estate investors do all those same things as well. But you know what I mean? You're doing more transactional things like day to day versus more on like a 6-month segment. And so for a normal business owner that's doing lots of transactions, you don't want to use it like a credit card or like a debit card or a bank account. When you need it the most is when you'd want to tap into it, right? It's when I need extra capital that's not used on a normal operational perspective. And so for me, that's what it is. And, for us, that's really how we've even positioned it in a lot of ways, is just letting it sit there and use it for a storage of capital if there's ever been a need that could be used for.
Yeah. I would say 2 words come to my mind. War chest. Those are 2 words, but I was actually meant for 1 word. So 2 categories come to my mind. There's a war chest.
If people don't know, we're recording this video at the very end of the day, and we're tired. It's not an excuse, but we're cranking for everybody.
And then so that's category number 1 is like, hey, if you're a business owner, I believe every business owner should have a liquidity reserve, and I think it should be more than the average employee or just average person individual. So you should have an individual emergency fund, but then if you're a business owner, you should have an additional emergency/war chest to support the business.